Good afternoon. I will be expanding a little bit on the indices for this week. Well, this is what I'm expecting to see, and the fact that we are starting off with the 1 hour chart already shows you that I have nothing solid on the higher time frame, and I'm still paying attention to the lower time frame. Last week we can clearly see that we had a consolidative beginning until Thursday. We can see the days right there. Until Thursday, we made an SMT divergence by sweeping Wednesday's lows and then continues shooting to the upside, while the Emini S&P 500 could not do the same. In other words, ES could not sweep the lows while NQ was able to sweep the lows. So we had a consolidation, sweeping liquidity, SMT divergence, then an expansion to the upside. That's great and all, but what does that mean now? Well, right now I am measuring the entire range from last week's low on Thursday to the high that we made, well, I can say on Friday, but technically today as well. It's more or less the same area, and we can see that the 50% area is this we can call this an order block breaker, I'm not sure, but this few down close candles, I am paying even more attention to them, and the entire 50, actually just the 50% retracement of the entire thingy range is what I'm paying attention to. So yes, there is a chance of us coming back to this initial consolidation. If this is a market maker sell model, there is a chance of us coming down to the 17,825 if we are actually changing direction to bearishness. Of course, NFP is going to decide the direction, and I still think we are going to be bullish ultimately, but we will never know. So now, zooming in a little bit into this price action, this was Friday's high. We can clearly see that Friday's high was swooped at that point, so we went, swept the highs, displaced lower, creating a fair value gap. The yellow line is the midnight price, by the way, so creating a fair value gap that crosses within the midnight line, midnight price. We can see price traded higher into it at 7 in the morning, 8 we came again, and then at 2 p.m. markets were not able to get as far as the midnight opening price. In other words, the equilibrium for the day, the fair value area for the day, which is fine. And now we've been falling off since then. So some of you might be asking what this line is, this blue line. Why did I put that there? Well, essentially it's because of the new SMT divergence that we just made now with the Emini S&P 500. We can see that this high was created at 4 in the morning. This high was also created at 4 in the morning. Notice how NQ failed to sweep those highs, while ES proudly swept the highs. So this crack in correlation is something that I would not take lightly, and it's something I would pay attention to. For example, right now we have a swing low right there at 1 p.m. that has been violated. That swing low makes me think that this is a valid market structure shift. And what makes this swing low even more special to me is the fact that this swing low is broken by a fair value gap. So this fair value gap, even though it's not yet formed, in the next few minutes it would be. In the next 5 minutes it will be confirmed, and it's a 1 hour fair value gap, so there's no real rush or anything. So I'd like to see if price can retrace back into this fair value gap and give us a little bit of discounted prices. When I say discount, I don't necessarily mean all the way down to last week's low, but basically the 50% of this range that we measured, which is basically last week's low to last week's high, because the low was made on Thursday, the high was made on Friday, because we kept climbing higher. So the range of last week, measure it, the halfway point is my first target which is basically around this yellow line right there. So that's all I have on the indices. I don't have much else but short-term bearishness. So for now, stay safe, good luck, and good trading.